Welcome back. You're still tuned in to Markets Today on CNBC TV18. Let's get to the rest of the stories that we're tracking for you. The fourth headline today, Zee Entertainment fired up on reports that it is set to repay Innocent Bank $10 million. The NCLAT has stayed the NCLT order, admitting insolvency proceedings against Zee. Surbi is here with the details.
So Zee is on our radar today, and that is because there are reports from Bloomberg that suggest that Zee is going to repay Innocent $10 million, and this repayment could happen as soon as Friday. Just to alert, on 8th of March, Zee had also settled disputes with IPRS, and that was worth 211 crores. Now, all of this was expected as these amounts with creditors are pretty low, and Zee would do everything in their power to wrap up their the merger with Sony. Now, some of the key dates that needs to be watched out for is 29th of March, where they have an hearing with NCLAT, and if the payment with Innocent goes through, this will be kind of a non-event. And also another important date is 31st March, where there is an NCLT hearing, and in this hearing, the merger proceedings will move forward. We have a view from Elara Capital, where they say that Zee remains inexpensive at current valuations of 16 times 1 year forward PE multiples, and they're also factoring in the delay of the merger and lower ad revenue growth due to uncertain macro environments.
Okay, all right, Surbi, thanks very much for that. Well, on to the fifth headline today. Titan gained over 2% after Abu Dhabi Investment Authority invested $500 million in Lenskart. The company gained on the back of an expected rub-off in its eye care business valuations. Manglam is here with the details.
Well, Titan is at the high point of today's trading session, and that's perhaps on the possibility that now the street will start looking at their eye care business as a separate valuation driver, primarily because of the big announcement that came this morning, the fundraising for Lenskart, $500 million invested by ADIA at a valuation of $4.2 billion. Just looking at Lenskart's metrics, FY22, their revenues grew by around 66% to 1,500 crores with a loss of 102 crores. How does that compare with Titan's business? The eye care business in the first 9 months of this year did revenues of 524 crores and an EBIT of 96 odd crores. Assuming 2,000 crore revenue for Lenskart in FY23, this deal values them at around 17 times price to sales. If Titan, they've guided for 750 crore sales in FY23, if they go ahead and do 1,000 crores worth sales in FY24 with an EBIT of 120 odd crores and not using the high metrics but a lot more conservative numbers, 6 to 12 times price to sales multiples, this business could be worth anywhere between 6,000 to 12,000 odd crores. And this, remember, analysts haven't estimated in their sum of the parts valuation for Titan so far. So could this be a case for analysts to look at their eye care business as a valuation driver?
Okay, all right, Manglam. Thanks very much for that. Sameer Khetrupal of Jubilant Foodworks tells CNBC TV18 that it will add over 250 Popeyes stores in the medium term. In addition, Joshua Kobza, who's the CEO of the Restaurant Brands International, said India is one of the biggest priority markets for the company.
We are very excited about the response that we have received from our customers, the repeat rates that we have seen, and the satisfaction on food level. They're coming back and asking for more. We are ready to expand. I think that's kind of the big announcement. We'll add we will get to 50 stores in 1 year and 250 in the medium term. So super excited about the journey. I think the market is huge. It is the QSR industry as a whole is poised to grow 9 to 10%. My own estimate is the chicken as a space will grow faster than that.
I'm personally very excited for Popeyes all around the world, but particularly in India. That's why I made it kind of my first international trip, because I think it's one of the biggest priorities for us all around the world.
Okay, well, in more stocks and news then, Samvardhana Motherson fell 11% after the promoter Sumitomo Wiring Systems sold 3.4% stake in multiple block deals. Vivek is here with the details.
Well, the stock in focus was Samvardhana Motherson, and it was a confirmation of a CNBC TV18 news break. Last evening we did tell you that there was going to be a likely block deal in this particular name from the Japanese promoter entity Sumitomo Wiring. Along expected lines, 3.5% of the total equity of the company changed hands via a block deal in today's trading session. And there was a notification to the exchanges from the company itself. So Sumitomo Wiring System, a Japanese company as well as a promoter of the Motherson Group, actually exited part of the stake. In fact, what they said was that The stake sale was part of the global deleveraging strategy to fund partial debt prepayment in a rising interest rate environment. In fact, what they're also saying is that they've been partners and they've been JV partners with the Motherson Group since the IPO of the company in 1993, and it's the first stake dilution by this particular group for the first time in 4 decades. What they're also saying is that they continue to remain a partner, and in fact we had access to the term sheet of this particular block deal, and as of now, there seems to be a commitment saying that there won't be a further stake sale by the Japanese promoter, at least for the next 180 days.
Okay, all right, Vivek, thanks very much for that. Well, Patanjali Foods fell nearly 3% in intraday trade after the exchanges froze promoter shares as the company failed to meet the minimum public shareholding norms. Nearly 293 million equity shares have been frozen. Patanjali Foods CEO Sanjeev Asna told CNBC-TV18 that the company was confident of complying with the norms within the next few months.
We are reasonably confident that this should occur in next couple of months. Investor meetings are already going on right now. There reasonable confidence that we would meet every single compliance what SEBI requires to be done. Our company is very confident. Our work towards business operations in terms of the management's commitment and everything remains.
Okay, so that's Patanjali Foods, the clarification coming in from the company there. But just a quick word with regards to Eris Life Sciences. That particular company was in focus. This is after they decided to buy 9 dermatology brands from Dr. Reddys for around 275 odd crores. These particular 9 brands generated around 61.6 crores in terms of sales in FY22, and this compares to around 52.8 crores in FY21. They have already done around 9 months in terms of the Feb sales as of FY23, 62.1 crore in terms of total sales. Now, in terms of valuations, it's around 4.4 times FY22 trailing sales, and that's largely in line with what we've seen for other acquisitions and M&A within this entire space. Now, it is interesting because Eris has really built up its portfolio when it comes to dermatology. For example, they've acquired 9 brands from Glenmark just in the month of Jan for around 340 odd crores. And now dermatology, post the Glenmark acquisition, had already risen to around 13% of total sales. And this is expected to help them propel it higher. Remember that they had also made an acquisition of Oaknet, which is a Mumbai-based company. They had picked up the company last year for around 650 odd crores. So generally, seems as though dermatology is a space that Eris Life Sciences is definitely concentrating on. And for Dr. Reddys as well, is definitely a positive, considering that they would be getting cash into their books, not to mention that they are looking to divest non-core assets and businesses. Well, with that, it's a wrap on this edition of Markets Today. Thanks very much for watching.